Thank you. Yes, we'll call. So, good morning, ladies and gentlemen, and welcome to the 111th Mpc Press Briefing. We're always grateful to the press for the partnership and the crucial role you play in helping to inform Ghanaians about the bank's monetary policy decisions. This morning's press briefing follows the meetings of the Monetary Policy Committee last week, and this morning we'll be listening to the chairman of the media an opportunity to ask questions at the end of the presentation. We're live on Facebook at the Bank of Ghana, on the Bank of Ghana website, page Brazil Teams, and on YouTube Bank of Ghana. As part of the bank's inclusion efforts, we have included a sign language interpreter in our MPC press engagements. This to enable our brothers and sisters to also understand and appreciate the bank's MPC decisions. I want to thank Governor Addison and the management of the bank. I think they deserve a big round of applause for the approval to include this in our engagements. Governor Addison, thank you very much. It's time to listen to the chairman, and with a big round of applause, I respectfully invite the chairman of MPC and Governor of Bank of Ghana, Dr. Enos Addison, to deliver his statement for today.
Thank you very much, Sonny. Good morning, ladies and gentlemen of the media, and welcome to the press briefing after the 111th Monetary Policy Committee meetings, which took place last week. The committee deliberated on recent macroeconomic developments and assessed the current rate of the economy and risks to the inflation and growth outlook. A summary of the assessment and the key considerations that informed the committee's decision on the stance of monetary policy is provided below. Global growth is projected to decline in 2023 to 2.9%, down from the 3.4% in 2022, according to recent IMF projections released in January 2023. The projected slowdown comes on the back of persistent elevated inflation levels, tightened financial conditions, and uncertainty stemming from the lingering effects of the Russia-Ukraine war. The onset of the recent turmoil in the banking sector in the US and Europe is likely to further cloud the outlook. The above notwithstanding, latest purchasing managers' indices point to some rebound in economic activity in February 2023, reflecting the moderation in price pressures, improved supply chains, and the reopening of China's economy. But it is unclear yet how the recent banking sector crisis in the US and Europe would impact this initial rebound. Headline inflation in advanced economies appears to have peaked and currently on a steady decline across advanced and emerging market economies, driven by lower energy and food prices, stemming from weakened global demand and easing supply chain constraints. However, underlying inflationary pressures persist, mainly from the pass-through effects of high input costs, rising wages, especially in the advanced economies, and currency depreciation against the US dollar. In the outlook, global headline inflation is expected to ease to 6.6% by December 2023 from 8.8% in 2022, reflecting declining fuel and non-fuel commodity prices and the effects of central bank policy actions. Global financial conditions eased somewhat in early 2023 as slower growth and moderated inflation in advanced economies led markets to pricing further reduction in the pace of future policy rate hikes. More recently, the US Federal Reserve, the European Central Bank, and the Bank of England have all increased their respective policy rates, albeit at a lower slower pace, but with commitment to maintain a tight monetary policy stance until inflation is contained. Meanwhile, concerns that inflation may stay elevated for longer than previously anticipated kept long-term yields high, while fears about global growth prospects and the hawkish posture of central banks in advanced economies amid the ongoing turbulence in the banking system have triggered volatility in the equities market. On the domestic scene, recent price developments indicate that the inflation surge in the economy witnessed since December 2021 has peaked. The latest two readings since the January MPC meeting indicated two consecutive drops in headline inflation from the peak of 54.1% in December 2022 to 53.6% in January 2023 and 52.8% in February. The latest decline in inflation was attributed to lower food inflation, while non-food inflation remained broadly stable. Food inflation declined to 59.1% in February 2023 from 61% a month earlier, while non-food inflation remained flat at 47.9%. Underlying inflationary pressures also eased in the first 2 months of the year. Excluding energy and utility prices, the bank's core inflation measure declined from 53.2% in December 2022 to 52.8% in January and to 52% in February 2023. Also, the weighted inflation expectations of banks, consumers, and businesses declined. In the real sector, the bank's high-frequency indicators pointed to further moderation in economic activity in line with the challenging macroeconomic environment. The January 2023 update of the bank's composite index of economic activity indicated a contraction in economic activity by 7.6% compared to a growth rate of 4.2% in the same period of 2022. The main indicators that weighed down the index during the period were port activity, cement sales, imports, and credit to the private sector. While real sector activity showed continued decline, both business and consumer sentiment continued to show further improvement in February 2023. Consumer confidence improved on account of easing inflation pressures, which led to some optimism about future economic conditions. Also, business sentiments improved as companies met short-term targets amid positive company and industry prospects. The survey findings were consistent with observed trends in Ghana's PMI for February 2023, which rose above the benchmark level of 50 for the first time since January 2022. Developments in the monetary aggregates in February 2023 showed strong growth in broad money supply, an indication of increased liquidity in the banking system, driven mainly by expansion in the net domestic assets. M2 Plus recorded an annual growth of 44.9% in February compared to 17.7% in February 2022, reflected in currency outside banks and deposit liabilities of the banking sector. Reserve money similarly went up by 54.3% compared with 21.9% over the same comparative period. Annual nominal growth in private sector credit was up by 29.5% in February compared with 17.1% in the corresponding period of 2022. However, in real terms, private sector credit contracted by 15.3% compared with 1.2% contraction over the same period a year before due to the high level of inflation. Developments in the banking sector broadly reflected the challenging operating environment in 2022 on account of macroeconomic conditions and the recent implementation of the Domestic Debt Exchange Program, in which all 23 universal banks participated. Our preliminary assessment of the impact of the DDEP on the banking sector based on December 2022 data indicates significant losses on account of impairment of banks' holdings in Government of Ghana bonds. The impact of the DDEP as currently assessed is moderated by the timely introduction of regulatory reliefs by the Bank of Ghana to support the banking sector, similar to the reliefs provided to the banks at the onset of the COVID-19 pandemic. As a result, the industry is still fairly resilient. A preliminary assessment will be updated once banks' external auditors complete their audits of banks' 2022 financial performance, making the necessary adjustments to reflect fully the impact of the DDEP. Banks are expected to publish their 2022 audited financial statements by end April 2023, following a 1-month dispensation granted by the Bank of Ghana on account of the DDEP. Total assets of the industry stood at 209.4 billion Ghana cedis in December 2022, representing a growth of 16.4%, reflecting sustained growth in deposits and exchange rate variations on banks' balance sheets. Total investments declined significantly to 64.8 billion in December 2022 from 83.1 billion in December 2021, indicating a contraction of 22.1% compared with 29% growth in the same period a year before. Total credit, on the other hand, increased by 28.5% to 69.1 billion in December 2022 from 53.8 billion Ghana cedis in December 2021. Of the total liabilities of the banking system, total deposits stood at 157.9 billion Ghana cedis, representing an increase of 30.4% year-on-year compared with 16.6% recorded during the same period in 2021. Key financial soundness indicators remain broadly sound, supported largely by the regulatory reliefs provided by the bank. Among others, the minimum capital adequacy ratio required to be maintained by banks was reduced from 13% to 10% as of 31st December 2022, and losses from the DDEP are to be reflected in the computation of CAR over a period of up to 3 years. Accordingly, the industry's average CAR adjusted for the regulatory reliefs was 15.7% in December 2022, compared with the CAR of 16.6% as of December 2022 without the DDEP. The adjusted CAR reflected valuation losses on Government of Ghana bonds, elevated credit risk, and revaluation losses on foreign currency denominated loans. Asset quality marginally improved, with the industry's NPLs ratio at 15.1% in December 2022, almost unchanged from 15.2% in December 2021, reflecting the higher growth in net credit, which outpaced the growth in the NPL stock. Provisional data on budget execution for January to December 2022 indicated a higher overall broad fiscal deficit cash basis of 49.7 billion Ghana cedis against the revised mid-year 2022 target of 38.9 billion Ghana cedis. The primary balance on cash basis recorded a deficit of 4 billion Ghana cedis against the primary surplus target of 2.5 billion Ghana cedis. Total revenue grants amounted to 96.7 billion Ghana cedis, marginally short of the revised target of the 96.8 billion Ghana cedis. Total expenditure was 146.3 billion Ghana cedis, above the revised target of 135.7 billion Ghana cedis. These developments resulted in a deficit of 49.7 billion Ghana cedis, of which 48.2 billion Ghana cedis was financed from domestic sources. Prices of Ghana's major export commodities traded mixed in February 2023 relative to the same period in 2022. Brent crude oil prices, which had been on a downward trend during the latter part of 2022, increased in the first 2 months of 2023 as China relaxed its COVID-19 restrictions. Brent crude oil dipped by 11% to 83.9 US dollars per barrel in February 2023 from 94.3 US dollars per barrel in February 2022. For the same period, cocoa beans traded at 2,677.8 US dollars per ton compared to 261.1 US dollars per ton. In contrast, gold prices recorded some marginal gains of 0.1% to settle at 1,858.9 US dollars per fine ounce in February 2023, driven largely by weak US dollar and expectation of further interest rate hikes by the Federal Reserve Bank. Despite the mixed performance in the prices of Ghana's major commodities, the trade balance improved in the first 2 months of 2023, mainly on the back of higher export volumes. In the first 2 months, total exports expanded by 11.2% year on year to 2.8 billion US dollars, driven mainly by higher gold, cocoa, and other export receipts. The value of gold exports amounted to 1.1 billion US dollars, representing an increase of 35.8%, driven mainly by a 38.5% increase in export volumes to 619,373 ounces. Cocoa beans and product exports increased by 15.5% and 3.3% to 387.6 million US dollars and 159.3 million US dollars respectively, mainly on the back of higher production volumes. Earnings from other exports, including non-traditional exports, were estimated at 538.2 million US dollars, representing a 10.8% year-on-year growth. In contrast, exports of crude oil declined by 18.3% to 562.6 million US dollars, largely due to lower export volumes. The total import bill, on the other hand, declined by 11.8% year-on-year to 2 billion US dollars, driven by the compression in non-oil imports. Non-oil imports dipped by 17.6% to 1.4 billion US dollars, while oil and gas imports increased marginally by 4.8% to 622.9 million US dollars. The combination of exports growth and lower imports resulted in a trade surplus of 752.8 million US dollars for the first 2 months of 2023, higher than the surplus of 205.8 million recorded for the same period in 2022. For the year 2022, the overall balance of payments recorded a deficit of 3.6 billion US dollars. The capital and financial account recorded a net outflow of 2.1 billion US dollars, mainly on account of lower FDI inflows and significant portfolio reversals. These, together with the current account deficit of 1.5 billion US dollars, resulted in the deficit of the overall balance. As a result, gross international reserves for 2022 declined by 3.5 billion to 6.2 billion US dollars. Net international reserves, which adjust gross reserves for the heritage and stabilization funds, as well as other encumbered funds, also declined by 3.7 billion US dollars to settle at 2.4 billion US dollars by December 2022. Gross international reserves further declined to 5.9 billion US dollars at the end of February 2023, providing cover for 2.8 months of imports of goods and services. However, net international reserves improved to 2.6 billion US dollars, reflecting a slight decline in encumbered funds. The local currency has been under pressure since October 2022, reflecting concerns about the DDEP, further softening rating downgrades, and seasonal demand pressures. However, the progress made on the DDEP and positive sentiments thereafter, including the beginning of discussions with external debtors, improved sentiments and helped reverse some of the losses. In the year to March 2023, the Ghana cedi cumulatively depreciated by 22.1%, 23.5%, and 23.1% against the US dollar, the pound sterling, and the euro, respectively. To summarize, the committee observed that global growth is projected to moderate further, but with positive prospects of easing price pressures, improved supply chain constraints, and reopening of China's economy. However, risks to the growth outlook are still tilted to the downside, reflecting the likely impact of policy rate hikes, potential slowdown effects from the recent banking sector turmoil in advanced economies, and further ramifications from the lingering geopolitical tensions. Global inflation is easing as food and energy prices moderate due to weakened global demand, improved supply of goods, and continued monetary policy tightening. Despite the emerging risks to global financial stability, central banks in major advanced economies have demonstrated strong commitment to containing underlying inflation pressures with sustained policy rate hikes, albeit at lower rates than earlier anticipated. Global financing conditions have eased slightly, reflecting changing market expectations regarding the pace of policy tightening. The US dollar index initially firmed up amid rising demand for safe haven currencies following the collapse of Silicon Valley Bank and Signature Bank. But so far, swift regulatory action and assurances to contain contagion risks, combined with decisions to boost dollar liquidity, somewhat eased market concerns about a wider banking and financial crisis. The committee was of the view that the ease in price pressures abroad would likely impact positively on Ghana's domestic inflation profile. On the other hand, the committee noted that the domestic economy still faces relatively tight global financing conditions, emerging risks in the global financial system, and heightened uncertainty about the global economic outlook. The effects of these on the domestic economy could be amplified by inherent vulnerabilities, including structural excess liquidity following the DDEP and the widening negative output gap. The macro-prudential risk assessments conducted during the last MPC meeting indicated increased pressure on profitability and solvency of banks prior to the implementation of the DDEP. The preliminary data available at this MPC show that the pre-pandemic capital buffers in the banking sector have been weakened somewhat by the recent macroeconomic challenges and the DDEP, although banks remain liquid. These require contingency measures by banks, supported by the regulatory reliefs to contain potential risks to financial stability. The Bank of Ghana will continue to monitor these developments going forward and stands ready to act very swiftly to safeguard the stability of the financial sector. On fiscal policy, the committee noted that the budget statement for 2023 has set fiscal policy on a consolidation path which is consistent with key elements agreed with the IMF at the staff level in December 2022. The domestic debt exchange, new revenue measures, and structural fiscal reforms will provide significant reduction of debt service and help create fiscal space. The fiscal outlook is contingent on financing of the budget and will require the conclusion of the domestic debt exchange program, as well as securing the requisite financing assurances from bilateral donors. Indications are that these discussions are proceeding well. Based on the above, it is imperative that Parliament prioritizes the passage of the revenue bills currently before it. Under the staff level agreement with the IMF, the Bank of Ghana and the Ministry of Finance have finalized a memorandum of understanding on zero financing to the budget, which will be signed shortly. The passage of the relevant revenue bills by Parliament will therefore conclude the required prior actions to advance Ghana's program to the IMF Executive Board. This will be critical in resetting the economy on the path of recovery, including putting it firmly on a disinflation path and sustained growth. Headline inflation has declined marginally for 2 consecutive months, but continues to remain relatively high compared to the medium-term target of 8 plus or minus 2%. To place the economy firmly on the path of stability and reinforce the pace of disinflation, it is important that the monetary policy stance be tuned further to re-anchor inflation expectations towards the medium-term target. Given these considerations, the MPC decided to increase the monetary policy rate by 150 basis points to 29.5%. Additional measures. The committee also decided to reset the cash reserve ratio on domestic currency deposits for banks from 12% to 14% effective 13th April 2023. In addition, the bank will step up liquidity management operations to address excess liquidity conditions in the market. The committee will continue to monitor developments in the banking sector and deploy other macro-prudential tools to ensure financial stability. I thank you.
Another round of applause for Mr. Chairman. Thank you very much, Mr. Chairman. It's Mr. Chairman, with your permission, it's question time. Ladies and gentlemen of the press, as always, let's keep our questions very simple. Our preambles very brief. 2 questions per media house. So round 1, George Wiafe, Elom, Isaac Edu. First 3. So let's shoot. George. So you introduce yourself, your name, media house.
Hi, good morning. My name is George Jaffe, Joy FM, Joy News. A quick preamble. In an earlier statement that the Bank of Ghana issued, you did confirm that you indeed financed the government of Ghana deficit. Now, help me out because I've been struggling to explain this to Ajwa Mansa and Mantumankebi. Was it an overdraft or you physically printed cash to deal with this overdraft issue with respect to the Bank of Ghana financing government of Ghana's finances? And also, how is that the impact on inflation since you did finance this thing, and how you also going about hiking the policy rate? Some might argue that it could be quite counterproductive. What do you tell people out there who complain that whilst the Bank of Ghana was hiking the policy rate, you were also behind financing the deficit, and how that has affected your war in controlling inflation? From what we are picking up, it is clear that the IMF program wouldn't come on by the end of this month, possibly in May and not even in April. With respect to the balance of payment position, what assurance again will the Bank of Ghana give us that despite any delays in us reaching the fund program, our balance of payment position will be quite impact and then have any shocks as the BOG moves to try and deal with the situation on the ground?
Okay, George, thank you very much. 2 questions per media house. Thank you very much, George. Next, Elon.
Thank you very much. Good good afternoon. My name is Elo from Economic Times. Mr. Governor, my first question. Um, According to your statement, the two readings of the inflation, I mean January and February, we recorded a marginal decrease, and we're expecting that at least the policy rate could have been maintained or could have been maintained. But I mean, you increase it by 100 basis points. Does it mean, I mean, inflation, there's still some, I mean, underlying pressure as far as inflation is concerned? And secondly, uh, the 44 billion exposure to government, we know it was securitized and converted into bonds. Let's know the level of, I mean, the haircut that has been agreed between the government and your good self. Um, my third question,
Oh,
let's know how much has been accrued in the stabilization fund, because we know that the World Bank was supposed to contribute also almost $250 million. How much has been accrued in the stabilization fund
thank you.
so far? Thank you.
Thank you very much. Next, Isaac Edu. Please, you have 2 questions per media house.
Good morning, Doc. I'm Isaac Edi from The Finder. With regards to the insolvency of banks, I want to find out what the status of the Financial Stability Fund is. It appears we're silent on that. How much has been put in as we speak? And then what is the bank doing about banks that are insolvent beyond what you have stated here today? Thank you.
Okay. Isaac, thank you. Joshua.
My name is Joshua Amlano from the Business and Financial Times. So, on the back of the question that has to do with the Stability Fund, so the 15 billion was initially based on the first 137 billion debt that the government was targeting. It came down to 87, somewhere thereabout. So, would it be that the excess of the 15 billion that has been scheduled for the Stability Fund could be used in dealing with the solvency issues within the banking sector? That's my first question. The second question has to do with the activities of the Treasury and cutting down the rates, interest rate, now standing around 18% thereabout. How influential that was in terms of your decision in hiking the rates? Thank you.
Okay, Joshua, thank you. Joshua, I'm ready for your response for this round. Thank you.
Thank you very much for those questions. George, the question was on the financing of government in 2022. I believe this was the question that you had posed. This is an issue that we have dealt with over and over and over again, including putting out a full page, notice in the newspapers when the bank received the national awards for the COVID-19, and all the details are in that particular press statement. First and foremost, Bank of Ghana's forecast for currency printing does not include, government financing needs. We make an estimate of the GDP for the year. A major factor in that is the cocoa production forecast. So that is what goes into forecasting currency printing requirements. If you go to the bank's office on Spintex Road, we have a currency processing center there. We have vaults full of CDs. So we don't need to print money. We already have cash sitting in our vaults and release these resources as and when the economy demands them. So that, impression that Bank of Ghana prints money to finance overdraft is completely wrong. It's just a mischievous way of presenting the issues. I think it was also quite clear in the statements that we made that given where the economy was in June 2022, there was a situation in which the central bank needed to fund the government. It was a suboptimal situation. I remember the last time we met here, I talked about not having a plan. And at that point, when the IMF came in, we needed to sit down with the IMF to recraft a program for 2023. And in the interim, this was the suboptimal situation to keep the economy on track, to allow the government machinery to work. It was important that the failures at the auction were not allowed to lead to disorderly market adjustments, and therefore the central bank needed to keep the system together until we reached the SLA agreement with the fund. And as I've just said this morning, part of the design of the macro framework going into 2023 and in the medium term would be the zero financing from the central bank. And that is why it's important that the revenue projections for 2023 and beyond are realized. You notice that we went to stress the importance for the need for Parliament to pass the revenue bills that are before it. Yes, I mean, we all know that central bank financing is not necessarily a good thing for inflation, but in the interim, when you don't have any other alternative, it's better than chaos. But now that we have a plan, now that we have agreed with the fund on the macro framework, the agreement is to put an end to the central bank's financing. And that's why we think that the revenues that are projected for 2023 would have to be recognized in order for us to stick to this zero financing commitment for 2023. So you're saying that, well, the IMF program is delayed. What would be the impact on the balance of payment situation? We are watching that case very carefully. We were all expecting that the IMF board would have met by the end of March, but that is contingent on obtaining the financing assurances from the bilateral creditors. Fortunately, there is progress on that front. The official creditors committee met last week. They are looking at a date in April by which time they expect to give the necessary financial assurances. And once that is out of the way, once we have signed this memorandum of understanding, once Parliament has passed these new revenue measures, we would have completed what they call the prior actions. This is what is needed for the fund to set a date for the executive board meeting. So hopefully, if things go as planned, by the end of April, we should see that executive board meeting taking place. And we are confident about the outlook. Our foreign exchange situation is not dire, and we believe that the outlook is not that critical. We've been fairly successful with the Gold for Reserves program, and we've been able to increase our reserves, through the purchases of gold. So it's not as serious as, initially projected. So I hope you're clear on the responses to this question. You come back next MPC meeting and ask me the same questions. Okay. So Elon's question was on the underlying inflation, which we agree with you remains relatively high, and the reason for the tightening of the monetary policy. But I think your principal question was on the exposure to government, the exposure at the end of the year, and whether a haircut has been agreed or not. These are matters that are still under discussion. So we don't particularly have a decision on that yet, but it's one of the issues that we need to reach agreement on as soon as possible. Then you asked a question about the Financial Stability Fund, which we have provided a lot of information on. We are all aware that so far the World Bank has provided or has promised to contribute $250 million to that fund. Under the fiscal framework for 2023, there is a 2.5% of GDP allocation for possibly financing or contributing to that financial stability fund. So again, there is progress on that particular financial stability fund. The World Bank has come out clearly to say that they are not interested in supporting liquidity to the banking system. Their resources would have to be used to address the question of solvency. And I believe somebody asked this question, I think Isaac, on insolvency of banks. The data that we have seen so far, I'm not sure what that means in terms of insolvency of banks. There are banks that have been impacted on the capital adequacy ratios that I've seen. Some of them have declined. I'm not sure if any banks have been driven into insolvency, uh, other than the ones that we already know, those that have that problem. But the banks are those banks that are currently reporting, capital adequacy ratios below 10% uh, and below will be required to submit recapitalization plans. In fact, we already met with them last week, and we have already asked those banks that are being impacted in terms of their capital levels to submit recapitalization plans for the central bank's review. And the processes uh, as to how they can apply for support for the Financial Stability Fund, I believe are being finalized as we speak. This question is similar to the question by Joshua. The size of the fund is not changing. It's still at 15 billion. Your question was whether since the original debt was 137 and it has dropped to 87, whether that would impact the size of the fund. I mean, in terms of the perimeter for the restructuring, I don't see the relationship between that and the size of the fund. The fund will still remain at 15 billion. But you asked a very important question, Joshua, on the activities of the Treasury and the impact of the 91-day instrument auction results, where because of the domestic debt exchange, we were seeing surplus funds at the auction, and therefore the rates at the auction has collapsed to, I believe, more like 20%, 21% or so. I haven't seen 18. right? So this is the question that you asked, and we are saying that inflation is still high. Inflation is still above 50%. From the macroeconomic perspective, we have to drive the rate of inflation down into single digits. And that's why the monetary policy rate has been raised to address the high level of inflation. And then, depending on the impact of the liquidity operations that we undertake, I'm sure the auction market will adjust. So let me leave it here.
Second round of questions. Novan Nanaoye. Yes. Uh, so Nanaoye, please shoot.
Good morning. My name is Nanoye from Asasi Radio. Mr. Governor, you just said that inflation is still high. Do you have a target you are looking at before you halt the increment of the policy rate? Obviously, a single digit is long term now. Also, I would like to know what the state of the e-currency, which is the ECD, is. Last time we heard about it, you were piloting in a certain town in the Western region also. Where are we with it? Thank you.
Thank you, Novan.
Good morning, Mr. Governor. My name is Norvan Hayford, and I report for Norvan Report. I think my question is also around the same ECD. And I wanted to find out from you, sir, how do you reconcile the imposition of e-levy on the ECD in view of Section 63 of the Bank of Ghana Act? And if you permit me to read that, Section 63 says exemption from income tax. The bank is exempted from the payment of income tax in respect of its functions under the Act.
Okay,
Thank you.
Novan, thank you. Justice.
Thank you very much.
Justice, very brief.
Thank you very much. The name is Justice. Let me say that this morning, our poll has swerved. What we were expecting didn't come. But, Governor, I have two quick questions. Recently, the ECOWAS has been meeting in Guinea-Bissau to discuss, further steps towards issuing the eco currency. Do you have any new information, update on it? And then also related to that is the call by certain people for an African central bank looking at the global financial crisis and its impact on the continent. What's your view on that? And then my second question is about, outward remittances from Ghana. I realized recently that you could only do it through banks, and that is at a very high cost. So, is there any problem, maybe thinking about issuing licenses to people to do P2P, remittances outwardly from the country? Thank you.
Okay, Justice. Thank you very much. Shall we ready for your response?
This question and the outlook remittances. So Nanoye's question was inflation is still high, and the fact that the target is still far away, and whether we have a rate at which we would pause in terms of the decisions on the policy rate. It's a very interesting question, and that's why we meet every other 2 months, right? And we reassess every other 2 months. When the committee meets, it assesses the outlook for inflation, and then on the basis of that, takes a decision. So we do not want to preempt the decisions of the monetary policy committee. Our inflation forecast suggests that inflation should reach 29% by the end of the year. And we are going to be watching that path very carefully, depending on the readings that we see. And on the basis of the readings that we'll see, the necessary decisions will be taken. The two next questions were on the ECD, and as you know, we had made a lot of progress on the ECD, and the pilot that we started has been concluded. But in terms of priorities, we initially thought we would have launched the ECD by now. Unfortunately for us, 2022 happened, a year in which you had, a very major dislocation of the economy. The inflation rates went very high. The currency lost a lot of value. That is not the context in which you want to launch a digital currency. So we had to sort of slow down the process on that and refocus our efforts on the macro, try to bring inflation down. And then at that point, we would go back to the ECD project and decide on a launch date. So the priorities have shifted because of the developments in 2022. And then this brings me to my friend's very interesting question on the Guinea-Bissau meeting. I'm not sure whether you have read some of the reporting on the Guinea-Bissau meeting. The West Africans went to Guinea-Bissau to argue about what constitutes a majority, right? If we have to convene a meeting to go and argue about what constitutes a majority, then we have serious problems. But this is exactly what happened because you have the Francophone countries and you have the Anglophone countries. And the issue is how do you take decisions on the basis of majority? Do the Francophones come in as a bloc or do they come in as individual countries? This is the debate going on there. Meanwhile, we are all struggling to meet the convergence requirements prior to, you know, the introduction of the common currency. It only shows that we have a lot of, work to do to be able to recognize the future ECOWAS common currency. And that also relates to the African Central Bank. I mean, if even at the regional level we are struggling so much, then you can imagine the obstacles to achieving a continental, common currency. It's a major task. The idea of the free trade area is great. Trying to move it into a single market would help facilitate trade. But moving on to the common currency would require a lot more effort. Uh, Again, the issues of macroeconomic convergence will come into play. So it's good to not to let not to let the dream die and continue to work at it, hoping that hopefully things would eventually move in the right path. But the reality is that there are major obstacles along the line.
Yes, Mr. Chairman. Okay, last question from Bloomberg, and then we end for today. Echo, very brief.
Thank you. I'm brief. Governor, I'm happy to see you. Governor, would you share your thoughts on the Swiss Bank and then the SVB issue and its ramification or its potential ramifications for our economy? I didn't hear you said anything like that. And my second question has to do with your medium-term target. When I write my articles and I say that our current inflation is 5 times more than your medium-term article, then something tweaks in my head. Okay. Is there scope to reduce it or to vary that medium-term target, say to 13 to 15% bandwidth? Because early on, you had told us that you expect inflation to do 25% by December. Just now, you say you're expecting to do 29%. by December. So to make it sound more feasible, can't we also vary our medium-term target from 8 minus plus percent to somewhere 15%? After all, it's a medium-term target. What do you think, Doc? Thank you.
Someone last one from UTV. Please, very, very brief.
All right. My name is Mark Byron with UTV. Governor, I want to ask a very simple question. The current one CD note in circulation is very, very bad. People are asking on Twitter, what is the reason for that? Is it that you want to replace the coins instead of the CD notes? Thank you.
Thank you very much. Chairman, that's the end of the questions segment. Will with your responses. Thank you.
Maybe let me start with that last one on the city note. We had already come out to say that it was cheaper for us to have the city notes minted in coins, right? So the idea was to move away from the lower denomination notes, the 1 CDs and the 2 CDs, because they circulate very widely and therefore they get mutilated very quickly. They get very dirty and therefore you see that we end up spending a lot of money trying to replace them. So this was the idea behind the introduction of the 2 Ghana cedi coin, right? But we did get some feedback from the public that they still prefer to have some of these uh, denominations, the 1 cedi note and the 2 cedi note. So we did not completely sort of stop printing them, even though the volumes that were being printed has reduced significantly. Does that answer your question? Yeah. So yes, the coins are in circulation. And, both the 1 cedi and 2 cedi coins are in circulation, and they have been upgraded. So they have some of the most modern counterfeiting features on them. The issue of the Silicon Valley Bank issue on Ghana, we had assessed that it appears to have been well contained in the US, and we do not expect any major spillover effects in Ghana. But you raised a very interesting question, our friend from Bloomberg. Can't we just bring the medium-term target from 8 plus or minus 2% to 15? Which raises the question of, is it an arbitrary number? Do we just decide on an inflation target? What goes into the setting of an inflation target? That's the question that you are raising. When all your competitors are inflation rates of 5% and below, because that's the benchmark, and that is what will make you either competitive or uncompetitive. So you can choose to set for yourself a 15% target and you will not be competitive. And this is the reason why, the single digit inflation target was set for Ghana. And we had reached a point where we were even going to lower the target further until, things, COVID and all of these issues came up. So it's important that we set an inflation target that would make us competitive. I don't think that the idea is to set a target so you can meet that target easily. This is what you say. So you set a pass mark at 40%, so that you can pass. That makes you a very bad student. So I don't think it's a good way of doing things. So the single digit target really aims at keeping us competitive relative to our trade partners.
Thank you very much.
for your time. Ladies and gentlemen of the press, our Director of Research and Director of Financial Markets will always be available. So if you want some additional information, respectfully, will be here to provide those additional information. Respectfully, let's report accurately. Our doors are open in the communications office. Use our channels to report, to engage us if you want any question answered. Respectfully, get all those questions to us and we'll provide clarification. A very big round of applause for Mr. Chairman. Mr. Chairman, thank you very much. Federal Secretary, Deputy Governors, the members of the MPC and Bank Secretary, thank you for coming. Press, we'll meet soon. Good afternoon.